Jefferies analyst Andy Bearish is picking his winners and losers in the food space going into 2023. He downgraded Starbucks this morning, warning of recession risks, but picked McDonald's as a favorite going into the new year. The food and drink space is where we find Sazi's take today. Let's start with Mickey D.
Yeah, a lot of information to unpack here from Andy Bearish. Really good note here. So Bearish is bullish on McDonald's, one of his top picks for next year. So let's tick through this. First, same-store sales really did well in the 2008-2009 recession. That is part of Barish's call here, that a company like McDonald's, there I am at McDonald's, had on there, very, very cool, will do well in a recession as consumers trade down. Now, he's also saying that same-store sales really did well coming out of the 2008-2009 recession. So that is a good. Perhaps if we enter a recession in the middle of next year and we come out of it in the latter part, that might benefit McDonald's, at least according to how the 2008-2009 recession handed down. And as I just mentioned, people trade down historically to McDonald's in tough economic times. Why? Because the food is still relatively cheap despite inflation. And here you can see that chart from Bearish here going back, showing those sales outperforming, relatively speaking, the broader restaurant industry during that period of the 2008-2009 recession. McDonald's doing pretty well during the recession and coming out of the recession. Bearish saying that through 2024, he thinks McDonald's brand relevancy led by value and convenience to support same-store sales and profitability outperformance versus peers. So McDonald's looking pretty good in a potential U.S. recession next year.
Okay, and so where is Bearish?
Well, he's not too keen on Starbucks, putting out a lengthy, I would say, downgrade report on Starbucks. Really the opposite of the play on McDonald's here, that a recession could impact Starbucks in a big way as consumers trade down from that brand. Perhaps maybe they go over to a Dunkin' brand, or they just make their own coffee at home. And then, right, I know, right? Go figure. People making their own coffee at home instead of spending $12 in Starbucks. But also noting that the shares are a little bit pricey from a valuation level right now. Thinks recession will hurt the company's sales. Also, another analyst noting that, or just thinking that Starbucks set its expectations for its financials too high at its recent investor day. Now, on the positive side, a China reopening should benefit a company like Starbucks. It didn't really benefit a company like Nike in the most recent quarter, but still, it might benefit from Starbucks next year. My take here to tie this all in a bow: in a recession, cheap burgers ultimately win. $8 coffees do not. And I think that fits or just jibes very well in what we've seen in past periods of recession. Consumers just cut these things out and look for cheaper alternatives.
All right, little luxuries in one way or another, perhaps. Value versus luxury.